All right, guys, welcome back to another episode of Forex Tech Magazine. Today is January 29th, 2018. The month is pretty much over. We got about, what, three more days, about 2 more days left in the month. If you have not made anything at all in the market, you probably won't this month. But hey, anyway, stay tuned. We might be able to make your February good. Anyway, hey, before we get into that, let's get into this. This is the disclaimer. It goes a little something like this. Any and all information shared with you by Forex Tech Magazine should be considered to be for educational and entertainment purposes only. Um, Nothing that we share with you should be considered to be investment advice. If you are in need of investment advice, then our suggestion to you would be to seek out the assistance of a licensed, competent advisor. Now that we got that out of the way, let's get into what you came here for in the first place, and that is to, I don't know, look at some trades, perhaps, maybe, perhaps. All right, and the trade we're going to look at is not this one right here. This is just something that we put up here just to play around with, and that is the U.S. Japanese yen. Let's go ahead and get right into what we're already into, which would be the Great Britain pound, New Zealand break my heart dollars. Look at this right here. So this particular trade, this was the A, this is the B, this was our C boundary here, right? And then of course our D extension is here, right? Came very close in the past, but as you see right now, price is currently on a downward trajectory, all right? And making it even worse right now, this right here is our entry point. You know, you see what's green. Excuse me, arrow is this is the day that we came in, and then this right here, of course, is a little separated line here is excuse me, where entry is, and you see what price is in relation to our entry. We're about a couple of pips off from our entry. We actually went below it for a little bit and went negative $8, and now we're at $85.87. So it's a long ways from where we once originally were to where we currently are now. Now, a big part of this right here is in the reason why this currency pair is going down is because there is a vote that's coming up, and I believe it is on I believe it's today actually. If I'm not mistaken, I gotta go back and check my economic calendar for this. It's not. Let's see here. Go here. Blah, blah, blah. There is a vote today, and well, when you know it, I can't find it. Let's see here. All right, I'll find it. When I find that, I'll come back to it. But anyway, so there's a vote today. I think it's the day of the tomorrow. I think it's today. But anyway, I think that's a huge part of the reason why price is moving down, like you see right now, because people are taking profits off of the table, waiting for the outcome of this next Brexit vote to occur, and before they decide whether or not they want to pull money back in. So the market is definitely at a U-turn point. In fact, you look here at our high on this particular pair, actually came at a U-turn point, right? Because it came right up here at this resistance, right? Price hit it, then started going back in the opposite direction. And then, of course, we put our downward trend lines in place just the way we can kind of monitor where price is going and how it's still moving in a downward trend. Because what we're looking for is a buy signal to re-enter the market if we haven't already entered the market this time, or re-enter at a better position. We will do so once the price crosses above this counter trend line here. Because remember, the trend is the price moving up. This is the counter trend, which is moving back. So we're waiting for price to go above that before we enter it to get towards our take profit, which is up here, right? Cool thing is this price, even though it's been trending in the opposite direction, it still hasn't went below our first fib retracement, which is at the 0.236. So that's a good basic sign that this thing still has the ability to push back up, even though it's went some, it's traveled quite a ways down. So I'm willing to endure, you know, a little bit of this pain right here, with anticipation that we should push back up and complete our Fibonacci sequence. Also remember too, there are stop losses down here below the A, so there's a potential that, you know, price could, you know, cross below our entry, break through this support, and push on down to our A. And if it does, then of course we'll be out with a loss. But we're, you know, anticipate the cost of that loss, and we're willing to sustain it, based off of us being able to hit our target. So let's check something. I want to look at something on a daily chart and just look at some overall. Let's see here. Clean it up a little bit. Okay. This is a daily chart, and of course we all know, you know, Great Britain pound is the problem child of the currency pairs at the moment with the whole thing with Brexit. But as of October of last year, this thing's been on a pretty big downward trajectory. It wasn't until December where it started to pull back up and push back in the opposite direction. So we feel fairly confident about this particular pair. Yeah. Yeah. Just looking at some levels on here, looks pretty good to me. We're gonna stay in this trade, see how this thing fares out over the next 24 to 48 hours. But I think we should be okay, but we'll see. But you know, like I said, if something happens, you know, this is why we got stop losses in place, right? Control those losses, my friend. Control those losses. Let's see here. The next one is the Great Britain pound, Canadian dollar. Let's look at this thing. Let's unwrap this. Great Britain pound, Canadian dollar. Once again, here goes our A, B. This is our C sequence, and the cool thing about this C sequence here, it actually lined up perfectly with our support and resistance, right? Right? Price came down, bounced off, went up, bounced through resistance, pushed up for a little bit, came back down, bounced off of resistance. Now that resistance became support, right? Pushed through, right? This is our downward trend, right? So it gave us a buy signal again. Price went up, went down, went up, went down. So it kind of played around a little bit. And came close to hitting the take profit, right? Very close, like probably within a couple of pips. But then it started to move sideways. And remember what we said before, when price trends sideways, I think we said about 70% of the times, it's going to continue in the direction of the original trend. So the original trend was up, and it starts to move sideways. That means 70% of the time it's going to continue to move up after it comes out of this sideways positioning. And just those other 30% of the times, it may just go in the opposite direction, which would mean continue to go down. In this particular case here, it's still trading sideways. As you can see, we did a downward trend line, right? Price went down. Price came up through the downward trend line, right? Closed above. That would have been great. Oh my goodness, it's a buy signal. But then guess what? In the next immediate candlestick, it closed back below the trend line, right? And you're like, oh my goodness, that's a no entry signal right there. So it just kind of like negated that and canceled it out and blah, blah, blah. And as you can see, price is still moving sideways. And it's treading along this downward trend line, right? So Great Britain CAD, no go, right? It's in a holding pattern. Great Britain pound, New Zealand dollar, no go. It's in a holding pattern. Do not buy this currency pair at this time if you're looking to buy. Do not recommend it. Based off what we're seeing right now, it's going down. And if you try to jump in right now, you could possibly lose money because you don't know how much further it's going to go down before it turns back around. My anticipation, though, would be, especially for this particular pair here, That'll probably come down to this lower level of support before it bounces back up again, potentially. It could, like I said, go further down. It could even go all the way through, which that would suck. Um, but I think that at the most we'd be looking at, hitting this level of support, maybe even piercing for a little bit before it turns back around. But we'll see. And remember, Fibonacci's is not 100%. It's not the holy grail. It doesn't mean that just because you drew Fibonacci's on here correct, just because price is adhering to the Fibonacci pattern for the moment, that it's a guarantee slam dunk win every time type strategy, because price can U-turn and go in the opposite direction, and then all of a sudden, it goes below the A, and then you're out of that trade. I've seen it happen before. Had it happen to me before. So that's why you should always use caution. Always make sure that you use your stop losses, and and take profit off of the table. Some people will say no, they want to go ahead and play it out and just risk what they have to risk, and if they make the money, they make the money, and if they lose it, they lose it. They don't care. It's an individual's prerogative, but I do think that a better money managing tactic would be just to either ensure that you don't have any losses, or to minimize your losses as much as possible. I know with stop loss, we're trying to minimize our losses, but if you do a risk-free trades where you're basically, once you get into the profit and you push up a little bit farther and you're making some money on the trade, you go ahead and put a stop loss in, then you're guaranteed not to lose anything if the price moves against you. You may suffer some, how can I say it, some premature take profiting, but in the long term, you kind of set yourself up and you're guaranteeing that, hey, you didn't take any losses, so your account is going to get the benefit of the compounding effect of interest being compounded over time, right? And so, believe it or not, your account would actually start to, especially if you're using leverage in your account, it'll start growing faster and looking a lot, maybe even look a lot better, just using that simple taking profit when I got a profit, locking it in versus trying to wait for the price to make the full take profit move. And it's, you're going through those waves in the market, going through the ups and downs of the market. Okay. So anyway, let's look at this right here. This is the Great Britain Pound Japanese Yen. I'm sorry, I know that was kind of a long-winded explanation, but I try to give you as much information as possible, so that way your trading is as easy as possible, and you got some kind of explanation to kind of build on when you're looking, and you're going through this, especially when you're looking at what I'm doing, because you're looking at me, you're just seeing my trading methodology, and if it's new to you, sometimes it's good to kind of have insights to the what the person's thinking and what their thought process is when they go through and they're making trades and whatnot. It makes it a little bit easier to follow, in my opinion. Right. So we go A, B. Looks like we came back to our C, which is right up in here, right? Of course, price crossed over the downward trend line, right? That was automatic. Let's go ahead and buy type signal, right? So price pushed up, and you had a couple other opportunities in here too. Well, I didn't draw it out here on the screen, but use your imagination. You can see where some downward trend lines at. Well, price crossed back over it again. Came all the way up here, peaked out, and really close to the to our D extension. Price began to pull back, as you see, and we drew these right a day or so ago. So you see where price pulls back, and it has not crossed over into the buy zone yet. So once again, this Great Britain Pound Japanese Yen would be a hold, right? Would not be looking to buy this position just yet. Would be looking to hold this position though, and potentially, buy it once it crosses over into the buy side, right? But we got to see that, and it hasn't done it as of yet, right? And if you guys are wondering how am I finding my D extension, just kind of remember, if you look at these charts, and this is something that's kind of unique with Smart Trader. I mean, you use other charting software, you could go back in and color code your Fibonacci's. I've done that before in the past, but I like Smart Trader because it automatically already has this done for you, and then not only that, it has has technology, whereas with the smart trade, you got the smart tools, right? And we can choose smart Fibonacci. And the great benefit about that is all you have to do is just find your low point on the chart, right? A little swing low, click it, and it automatically populates the Fibonacci's on the chart for you, which is, in my opinion, is freaking awesome, right? But anyway, so the reason why we chose that red extension is because price pulled back to the red, right? So we're just looking at color codes. I mean, if you look at the numbers on it, it's 0.236 Fibonacci extension, right? But all we have to think about is just say, hey, just pull back to the red. So anytime price pull back to any of the little red area, right, in the retracement, then we know that our extension is going to be up here in the red, which is the 1.618 extension, right? And then if price pulls back into this is lavender or purple, whatever it is, color here, right? Then we know that our extension is going to be here to the blue. And then same thing with the green. If price pulls back to the green, then we know our extension is going to be to the green. So it really keeps it real simple. It allows us to go in here and to set up our trades like really quick. Just kind of go in and analyze the market really quick. So that way we go ahead and do our setups, right? And then get trading, man. Let's see here. Let's go to the next one, which is the Great Britain Pound Aussie Dollar. Let's look at this one. All right, cool. So you can see here, this right has been multiple fifth sequence here. Here's the first one. Here goes the second one. It got completed. And here goes the third one. A, B, C. All right, pushed up. Went through our level of resistance here. On its way to the D extension. Of course, did not make it. Fortunately, price begins to pull back. Price did, however, close above the downward trend line, right, which is great. But now what price is doing is just starting to move sideways. It did make an attempt to go up, but it hit that resistance, and now it pulled back down. So, some people say, well, it's on the buy side. Well, yeah, no, technically, because here goes another high, right? If you fail to make a higher high, and if it fails to make a higher high, then what does that mean? It means it's either going back lower again, or it's moving sideways, right? Because remember, to be in a trend, you got to be either making higher highs or, lower lows. Because either you're trending up or you're trending down, or you're just moving sideways. And so right now, price went up, crossed through the buy zone, right? Great opportunity to buy. Price was moving up, right? Came up, and now it started to go back down. It made a high, and it could not make another high higher than that high, so we're not in an uptrend, right? But what it did do, it started moving lower, right? And now we're going to look and see if it's going to make a low lower than that previous low, right? Because if that does, then lets us know then what? We're in a downtrend, right? That's why we put a little trend line up here, just to kind of see what's going on. And like I said before, you could just be moving sideways. Could be, price is going to be consolidating for a while. Just because of this vote that's going to be coming out, it's going to be huge implications for the market. So it's going to move the market one way or the other. Just don't know which way it's going to go. Hopefully it's going to be in our favor, so that way we can all make some money together. And if not, then hey, we got stop losses in place, so that way, we'll limit any losses that's potentially there. Okay. But at any rate, this right here, I would have to say, is a hold. So right now, pretty much everything that we're looking at with the Great Britain Pound is a hold. Nothing I've seen so far, nothing I've showed you, according to my trading methodology. Now, you may have another trading strategy that you use, and your trading strategy, you may say, man, this thing is hot. Let's go ahead and buy it right now, buy the market, double down. Let's, use all the leverage that's available to us. And if that's your style, then good luck to you. God bless you. And, it's just not what I would do. But that might be your trading methodology, right? So here goes the Great Britain Pound US dollar. We got A, we got B, we have our C, right? And then once again it comes back to the red, so that means our C, we should be looking for the red extension. blah, blah, blah. There we go. Price came up to it, just like it has with all the other pairs, Great Britain pound. But unfortunately, price was not able to reach it. And so what you see right now is price retracing back, and it has been over the last couple of hours. Right, it's ever since Friday, last Friday. All right, now once again, not looking to purchase into this pair until price crosses over this downward trend line, and then we can go back and reset our take your profit back here at this D extension. But it hasn't done that yet, so therefore, once again, this is a hold, a wait and see, holding pattern type pair right now. All right. Now let's look at, since we got this open here, let's look at some of our alternative currency pairs, some of the ones that we're potentially looking at trading out of our live account. Of course, these pairs right here are what we look at every day, and we use these for our demo account, but we also have a live account that we trade. And we're looking to, of course, make money there. This right here is a great, not a great Britain. This is the US dollar, Canadian dollar. Which if you look at this, just off face value, it looks like muck, right? It looks like a mess, right? I mean, I'm just looking at this, and I got no desire to even want to trade this. Don't really see a trend right off. Oh, but look at this. Now we're on the daily. So we see 1, 2, 3, 4, 5. All right, so looking at the daily, now we see something a little bit different, right? Now we see where price, A, B, price put all the way back to our C, which is at 50, which is not really a fib number. It's more of a gain number, but that's okay. Right, because we still recognize it. Those of us who trade Fibonacci's. Pushed up for a little bit, pulled back. Now it's on its way up. So we're still in the red. So that means our extension would be here. Let's see here. The one thing, though, I think we talked about this yesterday. We looked at these, and we said that, you know, the one thing is that you know, some people, and you have to really be careful because one of the reasons why fibs don't always work is because when you see something like this right here, it's making it's clearly upward momentum on a daily chart, right? Because here goes the trend up. Price went up from, what is this, October 1st of last year all the way up until December 30th of last year, right? And then price proceeded to go down from December 31st all the way up until January 9th of this year, right? And then price starts moving up again and then kind of pulls back again, right? Cool thing about it though, price is hit, looks like a level of support, which is here, right? It's here and here. It's not going below that level of support, right? So somebody's looking at this on a longer term time frame and say, okay, this is, you know, it looks like it's clearly going to be some type of upward momentum here for this pair, right? But if you're looking on a shorter time frame, right, then all of a sudden it looks like, well, maybe not so much. Maybe this thing is like moving down into the side or something like that. I don't know, right? And there's been situations, and even here, where we went in and we said, okay, looking at this, it looks like it is it's moving down. So we put some fibs on here, right? Fibs are showing that it's moving down, right? But this fib right here never got completed. In fact, this fib right here got negated because price went through the A, right? So, you know, given our methodology, whereas we put our stop loss back at our A, we find our C, and then we get our take profit down here at our D, we would have got stopped out of this trade, and then for the lay person, they would have been like, wow, this stuff doesn't work because I just got stopped out of my trade and lost money, and I don't like it anymore. But the reality is, we were trying to trade um, down on a currency pair, right? We were trying to trade down on a currency pair that's actually moving up, right? It was just a retracement, and that's why retracements are hard to trade, right? Because you never know when price is going to snap back and start going back in the original direction, right? Those are what we call Gartleys, right? You can definitely form Fibonacci patterns inside of a Gartley, but you just never know when that Gartley is coming to completion. And so that's why they can be hard to trade, and that's why I prefer to trade, in the direction of the market overall. So the market's going up overall, then, one of the things that you can look at to kind of help add a little bit more confidence. And like I said, for still not 100% guaranteed, but one thing that you might want to consider to do to kind of help you a little more confidence in your trade is that if you trade on a smaller time frame, maybe wait to a bigger, maybe look at a bigger time frame, wait till price lines up on a bigger time frame with what you're trying to do on a smaller time frame. So what I'm saying is this: if you're trying to buy on a bigger time frame, wait till price goes into the buy zone on a bigger time frame before you go into the buy zone, before you start buying on a smaller time frame. Make sense? So before you start trying to buy on an hourly chart or a 2-hour chart, make sure price is in the buy zone on a daily chart, right? Or if you're trying to sell, make sure price is in the sell zone on a daily chart before you start selling on an hourly or a 2-hour chart. Right. Not saying that you couldn't, right, still, do it the other way, but it may help you be more profitable if you wait till it lines up. Okay. It may help you to avoid some of those stop losses and margin calls that people talk about all the time, right? Let's see here. Let's look at. Keep saying great good pound. Let's look at the Aussie dollar, US dollar, right? Love this pair. Just joking. I hate this pair. I've been trapped with this pair for like the last couple of weeks. Waiting for this day to hit my take profit, man. Oh my goodness, it sucks. But here we go, nonetheless, right? Let's look at this one. Right, this is the one that I'm in, and I should definitely have heeded my own advice here with this particular pair, because I bought in on this pair, right? And I am positioning myself to take profit up here, right? But as you can see, price is down here, right? Had I waited till price got over into the buy zone, all right, because I'm trading off an hourly chart, probably have a lot more momentum to push me to my take profit. But that's, once again, you learn from experience, right? And we're always trying to identify better, more efficient ways to make money in the market. And so sometimes, you got to go through little dings and dents before you can do that, right? Let's look at it on the hourly chart. And also, by the way, I do not trade off the daily chart personally, just because I think there's just, way too much money, way more money than I want to risk trading on the daily chart. I like trading on the hourly, 2-hour chart, probably at the max, maybe 4, maybe possibly, but definitely, hour, 2-hour charts are kind of my things. Okay, just FYI, if you ever wonder, well, what do you like to trade off of? So let's look at where we're at. This thing has been all over the Fizzace, right? Here goes the AB. This right here was originally the C, right? And we thought, okay, wow, this thing made a really aggressive move. Our B is right there off of resistance. Price came down, touched that resistance. Now all of a sudden that resistance became support. So this is a really good indicator. Let's go ahead and push this thing up. Price is going up. Came very close within a few pips of our take profit. Thought, okay, well, you know what? The next 24, it should definitely hit, right? Because it happened on a Friday. Came back, and then price proceeded to move sideways and then down. And then it gave us a nice little deep retractment, right? Where it came all the way down to our 0.236. And once again, you know, looking at this movement here, you know, we have some support and resistance here in the area. That resistance once again was acted as support for us. Price bounced off a couple times, pushed back up. Price came back down to another level of support, bounced around, pushed back up, right? And now it's back up here at this level of support as well, right? Where it went through, resistance went through, came back down, and now we're back here at the bottom half where it's about to push back up through again. And if you guys hear that little noise right there, that is my puppy, and he is just kind of walking around up, wondering what am I doing and why am I talking to a computer screen. Ain't that right? Yeah, it is. All right. So anyway, so the cool thing is with this particular trade here, looks like we are at 0.7168 right now at the moment. Price has moved up significantly over the past couple of hours. All right, the last 48 hours, it did pull back yesterday, and I think that's because of the move that it made the day prior. But the good thing is we're positioned to make a play on our take profit, which is at 0.7243, which, you know, Lord willing, maybe we'll get that within the next 24. We'll see. We are about how many pips away? We're about 76 pips away from our take profit, so that's great. So we're under 100 pips. Love it, love it, love it. Definitely could get this. And also kind of keep in mind, reason why we're probably seeing some activity in this particular pair too is because with the U.S. and China trade agreement on the line here, I believe there's supposed to be a meeting with with our Chinese counterparts this week, coming to Washington, and I think there's going to be a statement that's going to be released after that meeting, which I think takes place on the 30th and the 31st, if I'm not mistaken. So you may be getting some optimism with this particular pair. Also, too, the Feds are going to be releasing their statement, I think, on Wednesday. So once again, there's some more reason to be optimistic about this particular pair, and I think that's what you're starting to see maybe in the market here. So we'll monitor it, we'll look at it over the next couple of days or so. We'll see, you know, how it plays out. But one cool thing about it, though, it is we've got to stop losses in place. So if, you know, price moves against us, you know, we'll be looking to get out. So stop losses, it's not shown here. It's on the other. Well, actually, you know, yeah, I'll take profits and everything's in place. So anyway, we're gonna see how it plays out over the next 24 to 48 hours, and hopefully, man, God willing, we can ahead and get out of this pair, because I really want to start trading some other pairs. I really want to start putting some money into this account, but I need to lock up this these pips and get out of this trade before I start looking at other trades. But anyway, so that's it for me. Hey, I want to welcome everyone who signed up for our channel recently, man. Thank you guys, man. I appreciate all of the love, man, and support. If any of you guys have any questions, thoughts, comments, or anything like that, feel free to write us at questions@forextechmagazine.com, or you can go over to forextechmagazine@gmail.com. If you're working on a trade or something and you want just a second set of eyes to look at it, you know, send me what it is that you're working on, and I will do a show around what it is that you're working on, and give you my own opinion about it, right? And you have your opinion, I have my opinion. My opinion may line up with yours. My opinion may counter yours, right? But that's okay. It'll be a discussion, and so that way, you know, I could be right or I could be wrong, right? You could be right, you could be wrong. I don't know, but it's a good way to kind of develop your skills as traders when you start looking at different opinions about what it is that you may be trading, and understand why someone else may have a different perspective, or maybe even the same perspective that you have of a trade. Anyway, guys, listen, that's it for me for tonight. Hope you guys enjoyed it. Hope I've been able to share with you some, impart with you some wisdom. Remember, on these Great Britain pound pairs, I got a hold on everything. I don't see anything that's worth getting into right now at the moment, or even really is giving us a signal to buy at the moment. It seems like everything right now is kind of hold off. So we're going to hold off before we make any new entries. Same thing with my other pairs. With the Australian dollar and with the Great Britain pound. Wouldn't get into either one of those right now as well. I think I would hold off on those two for the moment. So that's what we're going to do. We're going to sit tight. And I will see you guys back here in another 24 or 23 hours. Anyway, take care. God bless you. See you soon.